Okay, hi guys. Welcome back to the technical charts analysis section. So over here we'll be analyzing the price action, and also we need to understand what are the latest sentiments regarding specific financial instruments. So we're going to start off with the US dollar index again. So for those who are new, the US dollar index measures whether the US dollar was weakening or whether the US dollar was strengthening. So over the last couple of weeks especially, again we have seen by now that the US dollar was on a bearish tone from 25th of May, most recently, but of course before that it was at a much higher level. So as recent as the 25th of May over here, okay, it was a clear bearish move, as I would put the factor down to most economies opening up, and also most countries around the world, including even China, Europe, the UK, and of course the US, showing encouraging economic data from the manufacturing and services PMI reports, which has been improving over the last 3 weeks or so. So with the economies and economic numbers improving, we can see demand for the US dollar dropping. Okay, and of course it cannot drop forever, and the turning point was actually on Thursday's FOMC statement, where the FOMC mentioned that they are looking to keep interest rates low for the next 2 years. Okay, so although that statement, for those who trade based on news and statement, most of you, once you hear that statement, you'll be you'll be selling the US dollar, because you are hearing that interest rates will remain low, and theoretically when interest rates are low, the US dollar will continue to remain weak. Okay, however, the US dollar has already been bearish for quite some time, and a lot of that news or expectations for a low interest rate has already been factored into the US dollar. Okay, so the US dollar actually consolidated since the FOMC statement, trading within this range. Okay, over here. Okay, trading within this range, and towards late into the US trading session, you can see that the US dollar strengthened considerably. Okay, so mostly, but the turnaround point was already on at 2 a.m. on Thursday, when the FOMC statement was released. Okay, so as the US dollar was mostly consolidating and then bullish on Thursday, number one, we can see that the UK pound, again the UK pound has been on a bullish run ever since the US dollar was weak. Okay, so everything has to come to a certain cycle, an end of a cycle. So for the UK pound, the bullish run ended yesterday, where it traded again in a range. Ended on consolidating on Wednesday, and yesterday on Thursday, we can see that as early as 200 hours plus 5, this is 7 a.m. local Singapore time, the UK pound moves down from 1.2743 over here, 1.2743. Initially it goes down about to this tip over here, goes down to 1.2652. This was a 91 pips move down. Okay, but again, remember, the move started as early as after the FOMC statement. So but if you're looking at the Asian trading session yesterday, 7 a.m. moves down 91 pips, and towards the afternoon the reversal was here. Okay, after over here, okay, this candle, this big long candle, this bearish candle. So the time was 1400 plus 5, this will be 1900 hours. So at 1900 hours, which is 7 p.m. local Singapore time, we can see the UK pound continuing to drop from 1.2685, and it goes down, initially goes down 47 pips, and then it comes back up to test this resistance again, or what I call as the starting point, and then continues to move down all the way throughout the US trading session to a low of 1.2587. Okay, so the UK trading session and the US trading session moved down a total of another 97 pips. So if you cut it from the Asian trading session, until the US trading session, it'll be total movement of about 154 pips. So it was a very nice and clear trade and direction. So that is what we had for the currencies yesterday. Okay, moving on to the euro dollar. Again, we can see the euro dollar, it is pretty bullish still compared to the UK pound, as the US dollar was strengthening. Okay, yesterday, as the US dollar was strengthening, we can see that first of all, the euro dollar didn't drop immediately, unlike the UK pound. Okay, unlike the UK pound. So for the euro dollar, it was mostly consolidating, trading in a range, and only towards the evening over here. Okay, this is at 12 a.m. local Singapore time, where the euro dollar really weakened. Okay, so it weakened about 102 pips at 12 a.m. local Singapore time, all the way until this morning. So for yesterday, the euro dollar was mostly trading in a range. This is the first one down. This is at sorry, over here. Okay, this is about at 5 plus 5, 10 a.m. It moves down about 66 pips. Okay, and towards this one is 900 hours. 9 plus 5 is 14. 2 p.m. local Singapore and Malaysia time, it goes up 62 pips. Okay, and towards the evening session, this is quite early. This is at 5 p.m. 1200 plus 5 is 17, which is 5 p.m. It goes down another 60 pips. So it was trading within about a 60 pip range for one cycle, 2 cycles, 3 cycles, 4 cycles. So, and the final one was a push down, touched it, and broke through. Okay, so that was the movement of the euro dollar. So currently it is resting at this previous consolidation phase. There is a high chance it could weaken further if the US dollar continues to stage a mild recovery up. Okay, so again, you need to watch for later in the afternoon, 2 to 4 p.m. and also towards the evening, 7 to 9 p.m. So for the euro dollar, okay, on the 4-hour chart, it also looks like it still has room to go down a little bit more. Okay, possibly another 50 to 60 pips to about 1.2512 levels in the short term, and yeah, in the short term. So we'll see how it goes later. So whether this recent downtrend can be maintained later on, you go down. There's a high chance. The sentiment for the UK pound is still bearish, and for the US dollar is still bullish. Okay, so that is for the UK pound, the US dollar, and also the euro dollar. So looking at gold prices now, we can see that gold prices ever since last Friday's drop after the positive non-farm payrolls data, the gold prices has been bouncing up from 1,670 US dollars, bouncing up nicely on Monday, Tuesday. Again, you have a look at all the timing, and the key moves always happens at the Asian, UK, or US trading sessions. Okay, so it goes up, and on Wednesday also it goes up. And for yesterday, it was mostly trading in still on a bullish trend, and this was the key move up at 1500 plus 5, 2000 hours, which is 8 p.m. local Singapore and Malaysia time. The gold prices moved up from 1,724 all the way to a high of 1,700 and about 1,744. Okay, by the way, this line here is the previous high, which the gold prices tested also before it moved down way back on the 2nd of June, and also on the 1st of June. Okay, so even if you look at it on the H4 charts, you will also see this see that the gold prices came back to, okay, after coming down after the non-farm payrolls data, bouncing up nicely, and it touches back the resistance of 1,744. Okay, and after that, currently it's consolidating. It's not a total reversal down yet. It is just consolidating, awaiting further direction. Okay, so it's just currently consolidating. So moving on to oil prices again, the most recent events would be the record high number of COVID-19 cases in the US, and secondly would be the FOMC statement released on Thursday. Okay, so for oil prices, we can see that from a high of here $40.57 just on the 5th of June, which was last Friday. Okay, the oil prices has come down. So this was after the non-farm payrolls data was announced. Yeah, theoretically, again, non-farm payrolls last Friday was good. 2.7 million jobs created versus expectation of 7 million jobs being lost. But instead of seeing the oil prices go up due to better job data, you can see that the oil prices consolidated and was mostly on a bearish trend. Okay, so again, don't blindly trade the prices based on theory or news. Okay, so consolidating for a few days, and yesterday we can see that oil prices moved down over here. This was the key move over here at about 1300 plus 5 is 18, which is at 6 p.m. local Singapore and Malaysia time. Oil prices dropped from 38.7, okay, all the way to a low of 35.61. So it moved down about $3.03. And of course, this morning oil prices extended its drop. This is in line or in tandem with the S&P 500 also. Again, during I believe yesterday's technical video, we were looking at number one, the S&P 500 or equities, or even the other major indices in the US, including the Dow Jones and also the Nasdaq, has been on a bullish run for a while, and it was due for a retracement or correction. Okay, so again, personally for me, the trigger was the FOMC statement on Thursday, and yesterday's increase in the new COVID-19 cases just exacerbated the scenario, exacerbated the fall of the oil prices and equities and indices. Okay, so you can see that yesterday the S&P 500 moved down from 3,175 points all the way to a low of 2,999 points. So this is more than a 6% drop and was almost a 7% drop, which would have triggered the circuit breaker. Okay, so currently it's just consolidating. This is not a recovery, this is just a consolidation phase. So again, we need to see what happens towards the afternoon and the evening session. So again, that is how we understand. That's why it is important to know what events or news is going on in the markets, understand what was the sentiment of the instrument you're looking at, whether it was bearish. If it's been bearish, watch for some stabilization or consolidation, and there's a high chance that bearish move will, number one, start to come back to the bearish trend line. Number two, there's a high chance it will hit and also break through the bearish trend line. Okay, so yeah, and time it all towards the US, Asian, and also the UK trading hours. Okay, so that is what we have for you, what I have for you today. So I hope you guys again have a good trading day ahead and a good weekend. I'll try to come up with more videos by next week, and we'll see whether the videos can help you to increase your understanding and approach towards the markets. So have a good day ahead, and I'll see you again next week. Take care.